Hello, hello. Welcome back or welcome to the new folks. Thank you for joining. Today we are going to go through 5 steps to get you started in investing. Buying stocks isn't as daunting as it sounds, but you'll need to do some homework and master the lingo before you buy. To buy stocks, you'll need a brokerage account, which takes about 15 minutes to set up. After that, you can use the following steps to search, select, and invest in individual companies after you've added money to your account. While it can seem complicated at first, purchasing stocks is actually very easy. To assist you in purchasing your first stock, follow these 5 steps. Number 1, find a stockbroker on the internet. An online stockbroker is the most convenient way to purchase stocks. You can buy stocks via the broker's website in minutes after opening and financing your account. Using a full-service stockbroker or purchasing stock directly from the firm are 2 other choices. It's as simple as opening a bank account to open an online brokerage account. You'll fill out an account application, provide identification, and determine whether to fund the account with a check or by transferring funds electronically. My fave is Vanguard. Super easy and can invest in Vanguard's ETFs, but it is important to do your own research to see what will be best for you. Number 2, do your homework on the stocks you want to buy. It's time to get serious about stock picking after you've set up and financed your brokerage account. Researching companies you already know from your customer experiences is a good place to start. Allowing the overwhelming of data and real-time market whirling motions to overtake you when performing research is a mistake. Keep your goal in mind. You're searching for companies in which you'd like to invest, ones that you have confidence in. Buy into a company because you want to own it, not because you want the stock to go up, Warren Buffett famously said. By following the rule, he's done very well for himself. It's time to do some analysis after you've found these firms. Begin with the company's annual report. Specifically, the annual letter to shareholders from management. The letter will provide you a general overview of what's going on in the company and provide background for the report's figures. After that, your broker's website will have most of the details and analytical resources you need to assess the firm, such as SEC filings, conference call transcripts, quarterly earnings updates, and recent news. Most online brokers also give tutorials on how to use their tools. Number 3. Determine the number of shares to purchase. There should be no pressure on you to buy a certain number of shares or to invest your whole portfolio in a single stock. Consider starting small, very small, by buying only 1 share to get a feel for what it's like to own individual stocks, and if you have the stamina to ride out the bumps with minimal sleep loss. When you master the shareholder swagger, you will increase your position over time. New stockholders can look into fractional shares, which are a relatively new product from online brokers that allow you to purchase a portion of a stock rather than the whole share. That means you can spend far less in costly stocks like Google and Amazon, which are known for their 4-figure share prices. I have not bought in fractions, but people I know have. It's something to consider if you're looking into more expensive stock prices. Number 4, choose the type of stock order you want to place. Don't be turned off by your broker's online order page's jumble of numbers and incomprehensible word combinations. Use this glossary of simple stock trading words as a guide. Note, you will run into terms you may not be familiar with. Take initiative and Google it. This is a subject where you should know important terms. Don't worry, there aren't that many. Let us know if you would like a video on terminology. For example, for a market order, don't be shocked if the price you pay or get if you're selling isn't the same as the one you were quoted only seconds earlier. Throughout the day, the bid and ask rates fluctuate continuously. That is why you should know the terminology. It's useful to know that if you place a market order after the markets have closed for the day, your order will be filled at the current market price when the exchanges reopen for business the next day. Check the trade execution disclaimer on your broker's website. Some low-cost brokers group all customer trade requests together to conduct them all at the same time at the current price, either at the end of the trading day or at a fixed time or day of the week. Let's talk a little bit on limit orders. You have more leverage over the price at which your trade is conducted with a limit order. If XYZ stock is trading at $100 per share and you assume it's worth $95 per share, your limit order instructs your broker to hold on and execute your order only when the ask price falls to that amount. A limit order instructs your broker to sell your shares once the bid increases to the amount you specify. For more information on limit orders and other types of trade executions, stay tuned for a separate video that goes into the details of this. Number 5. Make sure your stock portfolio is in good shape. We hope that your first stock purchase marks the start of a fruitful investment career, but if things get tough, keep in mind that every investor, including Warren Buffett, has bad days. The secret to long-term success is to maintain your perspective and focus on the things that you can manage. The stock market's gyrations aren't one of them. However, you do have some influence over a few items. Take the time to learn about other aspects of the investing environment once you've mastered the stock market process. What role will mutual funds play in your investment strategy? Have you opened a savings account such as an IRA in addition to a brokerage account? Opening a brokerage account and buying stocks is a good start, but it's just the start of your investment journey. I hope this video has made you a little more comfortable in beginning to invest in the stock market. If you made it this far into the video, you must be serious about investing, and I'm glad. Once you simply start and continue learning along the way, it's a breeze moving forward. Remember, emotions are not allowed when you're investing in the stock market. Long-term patience is what is needed. That's it for this video. Until next time, please like, comment, subscribe, and it will really help us in continuing to make more videos to help you change your life.